Hey guys, Mike here. So I gotta say, it was kind of a strange day in the market today. I don't know if you noticed. We're gonna get into what I'm talking about when I say a strange day in the market and what's been happening. But after the Fed's meeting yesterday and after the announcement of 75 basis points and them staying really restrictive, there was one common theme that came through Twitter and the internet and everything, and that was layoffs. As you can see, Stripe is going to fire 14% of their employees. Morgan Stanley will start layoffs in the coming weeks because deal making is slow, as you've seen on the earnings calls. Got Amazon, they're going to freeze hiring in multiple divisions, including their corporate offices. Apple's putting hiring freezes on for this year coming up. Elon's going to fire 50% of Twitter employees. Wells Fargo, no shock here, going to brace for layoffs because of low loan volumes. Accenture's laying off started at 16,000 employees and got 2 more lists ready to go. And then Lyft is going to cut 13% of their employees. And I don't think it's any surprise, is it? I mean, after yesterday, especially when they realized that, yeah, to borrow money, to keep companies running, things like that, it's gonna be more expensive, and that mortgage interest rates are going to continue to go up. We'll see 8% easy by the year end, if not by the end of this month, I would think, honestly. And so, and everything, any kind of loan, interest rates are going to keep going up. So business is going to keep slowing down. And so I don't think that's a surprise at all. And let me know in the comments what you think. But I do think, and why it's always good to read in the comments, that you guys are onto something, because I've been trying to figure out where in the world everybody's gone, right? Because remember, we got 1.9 jobs for every person looking for a job. And like you said, I mean, you see down in the comments, people said, who passed away during the pandemic? Adults, like up to 1 million or something, whatever it was. But even if it's close to that, that's 1 million people out of the workforce. 2, baby boomers are retiring. Some of them just walked away early. Some of you got in the comments said, that's me, right? And remember, that was the biggest generation for a long time, a huge generation. And so for them to walk away, I don't know, the generation is below them trying to take over their certain jobs, right? Because remember, they're not, baby boomers working entry level jobs, right? And so for them, the other generations try to fill that gap. I don't know, and I think that's also why you see a shortage in mechanics, plumbers, electricians, because especially younger generations, they're not looking to do those jobs. One, I don't think they realize you only got to go to school for 2 years to a trade school, and it don't cost a ton of money to go there. And 2, I don't think they realize how much money you can actually make doing those jobs. And so maybe that's what's going on. Let me know in the comments what you think about it. But I encourage anybody to look into it if you're a younger person. And I'm not saying they're easy jobs, and so, but you're gonna have to work hard. But they make good hourly wages usually. At least I got people in my family that do it, and they say yes, they do. And so maybe that's where the blue collar workers have gone to, or not gone to. They've retired and nobody's taking their spots. Maybe that's what's going on. And so, that's the only thing I can think of. What you guys came up with. Let me know in the comments what you think about that. But, and that is one of the things that's keeping unemployment so low right now. And so, and these job layoffs, these are good paying jobs too, by the way, but the numbers aren't even going to put a dent, right, in the unemployment number at this point in time. And so, what to see and go from there. But the other thing to look at, what I was talking about in the market, they being weird, is look at all the indexes and then look at the VIX. The VIX is down more than the indexes, right? And the VIX, of course, is supposed to, when the S&P goes down, usually goes up. But instead, people are selling risk. And I'm going to talk about this a little bit more in just a minute. But, when you look at the S&P chart here, and keep it simple, it's obviously falling right out of that channel. Boom, down the last 2 days. But not a coincidence that it bounces right off the 0.5 Fibonacci level. That's not a shock. And you see right there, right when it hit it, it bounced, right? Because that and the 618 are pretty much 2 of the most popular levels you'll see. You'll get these bounces and moves up from. And so we'll see what happens tomorrow. But, because it's Friday and everything. But looking at the VIX, you can see it's been trading in this wedge for basically since the beginning of 2022 and respecting it very well. And it's hard to chart the VIX, but you can see, it's pretty much following those levels and just squeezing down. And so, if you're bearish or bullish, this is important because what's it going to do? It's heading down to the bottom of the wedge now. Is it just going to bounce off of it, fall through it? Obviously, if you're a bull, you want it to fall through it. If you're a bear, you say, no, I need to go up, right? Don't know if you're shorting the market or not. And then is it just going to keep in this wedge so it gets tightened until it picks a direction? And obviously, if it keeps doing that, which I don't know if it will or not, but the direction when it comes out usually is going to be pretty dang big. And don't forget to hit that like, subscribe button, guys, and share the video. It really helps beat the algorithm and push the videos out to new people and continue to grow the community. I really appreciate everything, guys. And so let me know in the comments what you think down below, what you think the VIX is going to do, because there is a person, I forgot the name, I give it to the members and keep them updated on this person who compares '08 to now, and he's even got one on the VIX as well. And so, I told him last night I saw the updates, I think that's going to end because they're projecting it on his little graph is projecting a huge fall and the VIX is going to spike. But what that was the Lehman Brothers moment, right? Lehman Brothers went bankrupt, just totally took the financial markets down with it. And so unless that's going to happen, that comparison should end within the next like 3 to 4 weeks. And so we'll see about that. Again, I can't predict if some major financial institution is going to go under anything. And obviously, the strength of our economy kind of says no. And overseas is where you'll see it happen, I would think, first, where you'll see it here. And we hadn't seen that yet. We've seen cracks and things getting a little out of hand, but, still holding together. I mean, Credit Suisse didn't even go under yet, right? And so, and I guess maybe they're not going to go under because they're issuing more stock and stuff. But the things I'm going to be watching as well, and you should be watching, and I'll keep everybody updated, but is obviously, you can look at junk bonds, you can look at HYG, and the reason why is this is smart money, right? And if you put it over the S&P, it normally goes hand in hand, but what you'll see multiple times is you'll see these kind of like JNK or HYG will lead the way first. Smart money will start to sell off, and these will start to go down, and then the S&P follows. Now they're in lockstep right now. It's heading down, S&P is heading down, but you see multiple instances there where JNK or HYG started to sell off first, signaling, hey man, get the hell out. And, obviously, what happens there. And then the dollar, obviously it fell through that trend line, which was expected for quite a while, and which went back to August. And now it's bumping right up against it. It got rejected off of it today. And so we're going to have to see what happens here, but it's looking obviously strong, which is not a surprise after yesterday's Fed meeting. And so yields were up, the dollar was up. These are not good, especially for risk assets. And so I'll definitely be watching those two closely because they are showing strength. It usually happens right after this Fed meeting when they raise 75 basis points, signal they're going to keep tightening. Those usually go up, and obviously you'll see what happens. You saw what happened today with stocks, and yesterday. And, some good news and bad news, kind of mixed or whatever. We had some earnings come out today. And Square, is the new PayPal, I guess, because they reported, or Block, I'm sorry, I always call it Square, but, you're looking at, they beat revenues, they ended up beating on their adjusted EPS as well, and the stock got heavily rewarded. And of course, as we know, not sure if this will hold up, but it's up 14% right now. And then PayPal, on the other hand, which was going up, and big money is rolling into this one, it actually beat expectations, but I guess they didn't like to hear that because it's been getting shorted like crap lately, and it's down 13%. It's way down from 86 now to, what is that, like 60, what is it at now, 67? Yeah, that is rough. And I'll tell you, one of the craziest ones I saw today was this one right here. And remember I told you about this yesterday, and it was Roku. Look at this. 20% sell-off after earnings, and then look what happened. You want to talk about manipulation? 20% move up during the day. Close the gap completely. And I like to throw these facts in there just in case, is mortgage applications, yeah, nobody wants them. It's just abysmal. We're going back to like 1997 levels right now as far as the fall is on mortgage applications, right? And so, no surprise. I was talking to people about this last night, some friends of ours, and like, who in the world wants to pay these interest rates? My Lord, you lock that in, especially not knowing what's going to happen next year. If you got to pay, you got to pay because God knows rents are high, right? So, that's the only thing forcing people into it. But yeah, it's slow in our area. Let me know about you. I know everybody keeps saying things are slowing. Some people still think things are booming, right, in their area as far as people buying houses, and that could be the case. But, remember the mortgage, the real estate industry is the first one to always get hit because they big ticket items, and it's going to be the cars. You already see that happening, even though there was a bump up I saw today in a chart showing that people were buying the heck out of some cars over the last like 30 to 60 days. So I'm not going to be surprised by that, not one single bit. So, tomorrow's Friday. A lot of people don't like to hold over the weekend, especially in this kind of market. So we'll see what happens on that one. Let me know in the comments what you think is going to be happening tomorrow. Do you think we're going to continue to sell off multiple days or start to bounce back as the market price is in the 75 basis point hike? We've seen this movie. The big question on everybody's mind is, are we going to test the new lows or actually break the June lows again? That's what everybody's thinking. But you see the VIX. I mean, it's very strange. And so the market's not freaking out. The market is not freaking out. And I'll tell you right now, what's really going to start happening is you see a lot of talk about it. But what's crazy is Apple now, with its market cap at 2.2 trillion, you have to combine, it is bigger than the combination of Tesla, Amazon, Netflix, I believe it is, and one of the other ones. Or it's bigger than Google and Microsoft combined. That's how big it is. But, with these prices, they've been hammered, right, so far. But a lot of money is going to start moving into Amazon if it goes below 90 and gets between 80 and 90. I think you're going to see a lot of money driving into it. Google's going to be the same way. It's going to be just like Netflix. When Netflix got down, everybody thought it was dead. They just started piling into that stock. I'm not talking about us, institutions, right? And so you just these certain price ranges, mark my word, you're going to see it. And so, wait for that to happen. And that, of course, helps stabilize the market because they do still have a huge weight in the market. And so, an Apple's Apple. I mean, it's owned by so many pension funds, institutions. I mean, I was doing a video for members last night. If you want to sign up for that, you can hit in the bottom down there. There's a few spots left. And, I was looking at Apple, and you go back to 08. Like, it doesn't even, I don't know if there was a stage 4 in 08. It just doesn't seem to have that major crash like the other ones do. It's crazy, but especially now. And so, and I just read, today that the iPhone wait list has grown from like a week to like, I don't know, 3 weeks or something for the new iPhone. So, yeah, that's Apple for you. So it's definitely one of the most reliable stocks out there for sure. And it's just owned by so many institutions. It just won't go down like the rest of them. That's why everybody says the market goes as Apple goes, right? If Apple has some crisis and drops off the face of the earth, yeah, watch out down below. So anyway, hope you got something out of it. Hit the like, subscribe button if you did, guys, and I will see you tomorrow.